Hello, this is Dave, and welcome to Equity Story. I hope you're well. Apologize a bit late today, but I just wanted to wait for those CPIs that came out at 11:30 and have a good look at them. This is obviously just a general share advice and not personal advice. And let's get going pretty quickly. So, um, CPI numbers are that gauge inflation, how much, uh, food is going up, electricity and uh, oil and petrol and all the stuff. Now, we know it's bad out there. Come on, I'm a normal mom and dad like you. I've got 5 kids. I see costs going up throughout every which way you look, and it's uncomfortable. So, and we've seen it the last 3 or 4 months, 5 months, inflation just increasing really strongly. And what that means is that more that inflation goes up, the more our interest rates are going to have to go up, and the more our mortgages are going to go up, which isn't particularly very, very good for a lot of us. So let's have a look what's happening. And you can see here the monthly consumer, and they're doing it now monthly, the RBA, so we can, and I think we have to because the way inflation is looking so strong at the moment. So hopefully this is going to really help the RBA to make those correct decisions. And what we've seen here, the monthly consumer price index rose 7% in the year to July and 6.8 to August. Um, if you're trying to be a half glass full, but it's looking fairly level. But what it does go on to say down here is that the monthly CPI indicator saw annual inflation of 6.8% in August compared to 7.8% in July and 6.8% in June. The largest contributors in the 12 months to August were new dwelling construction up 20.7%, ridiculous, fuel at 15%. The slight fall, and this is important, it's had a slight fall from um, July to August, and that's basically to do with fuel. And I think you've seen fuel come down a little bit recently. Now, I don't get too excited about that because I think the general price for fuel is still going up when you look at all the issues that we got in the world at the moment. Um, and I think the real worry here is that food and non-alcoholic beverages inflation increased to 9.3% in 12 months to August, with prices rising across most food categories, led by fruit and vegetables, increasing from 9.1% in June to 18.6% in August. That's awful, really, isn't it? Food is such um, a major part of everyone's life, and fruit and vegetables, all the stuff that you need to get down those kids, and you can see why moms are struggling. The worry is, when you look at this, I think the RBA are going to go there 50 basis points next week, and I think that the tightening is still on. Um, I just had a quick look at the Fin review. Uh, what a silly, what really, I mean, shares up. Australian inflation falls 6%, 6 to 6.8% in August. So, they're making that headline look okay, and I think that's really poor. It's very maybe in a rush, but it doesn't really tell her to, you read that and you think, inflation's falling. But when you actually look into it and you look at behind the scenes, it's not that good. So um, just be a little bit wary there. Just having a quick look at the markets, happy obviously to see a bounce. I think it's a relief rally because what's happened, the Bank of England has stepped in. There looked like there was going to be an absolute major issue with pension funds in the UK, which have these sort of they're called LDIs, these derivatives where there's about 1.5 trillion pounds worth of these um, of money in these sort of long-term derivative assets. But what it's meant is that these interest rates going up really quickly has caused a lot of problems for some of these pension funds, and possibly there was a possible case that some of them could have even gone broke or gone into liquidation. Well, anyway, the Bank of England has stepped in and tried to obviously protect the issue. Now, is this just the start? Is this just the start of something that is gonna you're gonna see this? A lot of these pension funds are these low interest rates that we've had artificially low interest rates for years. I think they've caused a lot of problems for a lot of pension funds throughout the world, and this is possibly just the rise of this new volatility we're going to have. And there's going to be so many other little things that potentially could come out of the woodwork where the way the world is at the moment. and the and these really socialist monetary policies that the world has employed really since 2008. I like the fact actually that the Prime Minister in England, she's gone back to Reaganomics or Thatcherite policies, and she's let it. She basically said, right, let's roll, let's reduce taxes, let's go back to the good old ways. And I think the Bank of England had a bit of a heart attack with that, and they've had to come in, step in, and bail out some of this really sort of, I'd say, more risky type of trading that a lot of these pension funds had been doing. Um, just having a look at what's happening. So good to see the bounce today. For me, if you have a look at the trending stocks today, we can have a quick look at them and see what they're doing. Um, I still think if you did any trends, if you were brave enough to trend any stocks this week, and you did it, and you got into them for a trend, for me, I'd still be, I wouldn't be being greedy. I'd be looking to take profits, and if I bought them as a short-term trade, I'd be treating them as a short-term trade. But having a quick look at them, obviously ATL is up 10% today, and that's been a good trade. And I'd be taking a profit on it in this market, this world. Gas did have their little move up earlier in the week, about 12%. And I had some good emails from people who said, Dave, I did take a profit. Uh, if you're in NAC for the medium to longer term, you'd be holding these. But if you bought them for a trade today, well, 5%, 4%, take it. Nothing wrong with that at all. FSA really hasn't done much. It's just flat. AHC, um, it still hasn't broken a trend. So for me, it's still a hold. But again, very, very lightly traded, as is KSC. So maybe I'll still be holding it. I think I'd like to see this hold. But look at it. I mean, you've got to pay 209, exactly where it was at the beginning of the week if you want to buy any. So really just lightly traded. Ash, holding the trend in a tough week. BDM, like I said, I think this could be a great story going forward. It's down a little bit more, nibble away. I mean, opportunity knocks, and little MTC is yeah, it's good. Up a few percent today. I think it was up a little bit more earlier, and again had a nice move. So I think you'd be holding that one. And again, MTC had a good announcement today as well. So um, yeah, excellent. Really, really sort of pleased with those trending stocks. Again, like I said, it's tough to trend in this market. If you are going to trend in it, tight stop losses and take profits. Very, very important. Announcements today. PMV, uh, excellent announcements. I won't go into all the numbers, but they beat consensus quite easily. The question, and they offered a special dividend. I think it was a $50 million buyback as well. I love all that. It's great. But would I be buying it? Maybe if I liked it, if I was in it, I'd be holding it. Or long term, I was happy with that sort of dividend. Um, the issue I've got is it's retail, and the markets are forward thinking. And the markets could easily be looking at this and saying, hold on a second, food's up, going through the roof. Maybe people aren't going to be buying the pajamas quite so many times this year, and retail's going to slow down, and you can understand that. So I think markets are forward thinking, and the share market is all about fear and greed, and I think there's enough fear in this to really hold it back from trending. If you wanted to get one retail stock, possibly as a dividend play, it's not a bad one. I think obviously JB Hi-Fi is our preferred one, but again, it's up there possibly in the top two. Um, and if but certainly from a technical point of view, it needs to do a lot more. It doesn't look like it's going to have a run like here. It looks to me at the best sideways to down. AGL came out, more or less confirmed guidance, but again, really poor price action. Would I be in that? No way, Jose. It should have gone on with it. It didn't. So not interested at all. NXL being sued by ASIC. Just stay away from this company. I mean, look at it. Just going down and down and down. Arguably, most probably is cheap, but it's just too many issues. It's what you've got to say. This is the hard money. You stay away from the hard money and look to try. And there's not much easy money at the moment, but if there is easy money, uh, like possibly some lithium plays and coal stocks, that's where you need to be. IRE, again, absolutely. I think guidance reduced by about 20%, appalling. Down it goes, and this could go lower. So uh, really, really bad. I mean, obviously, really, really struggling at the moment. Inflation and general market, and that looks like it could go lower, maybe back down to that sort of $8. Telstra put a good announcement out, said holding up reasonably well, and I sort of get Telstra, as a defensive play, 4% dividend in these times. If people are holding this for long term, I'm sort of okay with it, and I think the story is changing around a little bit, as per our lead analyst was explaining to you before he left, Mr. Wolf. Um, some lithium GLI had a decent announcement, and so did ASN. So ASN, some basically some really good extra lithium discoveries in on their projects. So they needed that announcement actually because they was just starting to play around with the trend. They've come up, they've bounced up, and I would like to see these about 34, 35 by the end of the week. If they can do that, I think maybe they could have another move up. But an exciting little lithium play, ASN. Um, they're in the United States, so not a bad territory at all. And they're sort of their feasibility study from Worley Parsons was excellent. I like the technology; it's really interesting. It's only really been used in China before, but it looks like a lot more renewable, a lot more green, getting that lithium out of the ground. So I hope this company does well. It's again not a bad, uh, I think an interesting story to play, an up and coming lithium producer. So ASN holding up reasonably well. And again, they did a massive raise, didn't they, at 35 cents. So I think hopefully that should be supported. PDI, some decent gold results, but really gold, they're just market's not interested in it at the moment. Um, what was a good announcement was AIM. Um, so renewed their contract for 5 years with Seven Network. There's your daily breaking up, not bad. Okay, uh, we've got this one as a long-term. It's trading. I think one times revenue aim. So we understand a long-term nibble here. You know, possibly what I would say. The charts never let us down, do they? You've all seen that over the years. So we've got the trend line coming down. I think give this another 2 or 3, 4 months. This is most probably down to around that 38, 37. We're going to see AIM, if the story is still good and market starts recovering, maybe bounce over that trend line. Then we start to see it swing. You know what? Then we'll buy it. I think we've got to stop. These are tough times. We've got to remember, what are we in? We're trying to always take easy money, not hard money. And after all, that's what we're in. We're in the money business, the business of making money. We're not in the business of loving shares. Talking of business about loving shares, Cogstate. Um, Again, I think this is a sell. Good announcement, very good. Japanese partner, excellent results for their Alzheimer's drug. I think 27% reduction in people, health from people developing Alzheimer's. It hasn't been peer reviewed yet. Plus the fact it's early days yet. There's no revenue yet from CGS. Good news, big tick up for the company. Um, but for me, in this market, I'm a seller. I'd rather put that money on the sideline and just wait, see what I can buy after this decent market pullback that I think we're going to get over the next few months. Um, Maybe someone said the other day, they said, Dave, what about all those dividend plays? Because you bought, I'll bring this across here. So I just using a good little website actually. So this little um, market index. So it gave me a number of high little dividend payers, and I think I picked that COF at about 11%. And everyone was saying, Dave, what about Grange and what about Fortescue? Well, there is this. I think the market hasn't really talked about this massive slowdown in China, what we've seen. I'm a little bit nervous about that, and it's good to see. Okay, they've come out with that sort of trillion yen infrastructure spend. Well, they needed to do, otherwise I think Arnold would have been going down a lot stronger by now. Um, so you just got to be careful of some of these dividend plays that they're not a dividend trap, and then you're not buying somewhere where you think you're going to get some ridiculous dividend, and of course the business is on the slide. Now, when you look through this, you feel that the coal plays like CRN, the the Arnold plays for the moment okay. But if you're going to buy them, you just got to watch that iron ore price. You can't take your eye off it, really. All the coal prices. I prefer the thermal coal prices. You know, the Whitehavens and the um, the NHCs of the world, New Hope coals. Again, you know, but if there's peace tomorrow in Ukraine, it's unlikely, but if there was, you could see these stocks absolutely crash. So you just got to keep that, you know, you've got to really keep an eye on them. There's sort of dividend plays that are still good for maybe another year and a half, but that could change really, really quickly. I think maybe more stable. You could have a look at things like DBI, Dell Bay Infrastructure, which do the coal terminal up in Queensland. You know, they're giving a really a nice little 8.8%. Pretty solid, actually. Not bad. You could have a look at AZJ. Hold on, let me just get you the company so you get the right one, and you might buy the. I don't want you to get the wrong company here. It should be there. AZJ. There we are. Horizon. So you can have a look at Horizon, give you a nice little 6%. A P of 12. This is rail infrastructure. So maybe two little ideas for you, solid dividend payers there. But just be careful you don't fall into a dividend trap, thinking you're going to get a massive dividend and it's going to come and knock you on the head. Um, just having a look at AJ Lucas. Obviously, it's down. The reason being they did a big capital raise at 11 cents. You know, opportunity knocks. You know, it's a high risk story, but like I said, a high risk story that could potentially be a big winner for us in the future. Um, all being said, I think the price action today, a little bit of a relief rally from um, the Bank of England coming in and helping out those pension funds, where potentially a lot of them could have actually gone under. And this is a danger. We are in volatile times, and what you're seeing now is other things that is this inflation going up, interest rates is going up, is causing underlying issues whereby these LDIs that a lot of these pension funds have been using could come a little bit unstuck. So, you know, this is what we are going to really, really difficult times. And we've had these, I'd say, sort of really um, sort of not Reaganomics. And this is the interesting thing. I like Truss, the new Prime Minister in England. She's gone back, wow, Thatcherite policies, lower taxes, you know, let give everyone a chance to work hard, and if they do work hard, to keep as much of that money they can. She's trying to build the economy that way, and it worked for Thatcher, it worked for Reagan. The only issue is it's given the Bank of England a few headaches in the short term because of previous policies that have been employed by a lot of fund managers that have been running um, pension funds. On that note, thank you for listening to Equity Story. I think I could sum up, yeah, a few dividend stocks in that conversation. I think AIM, I like it. Good news. You know, maybe wait, like I said, but I can understand if you're in it, hold it. I can understand maybe, you know, having a little bit of a nibble there. Maybe if it went a little bit lower, a little bit more of a nibble. Um, I don't really sort of want to put my hand in the fire today with any trending stocks. I think what we're seeing today is just really a little bit of a relief rally, and unfortunately, I think still going to be pretty tough over the next month or so. So let's hope I'm wrong. I mean, if you actually look, let's get the XJO back on that monthly. We've got 2 days to go. You know what? You know, you really want it back, that XJO, don't you? Back over that 6,700. Let's have a look at the Dow, see what Mr. Dow's doing. Yeah, you really want it back over that 30,000, the Dow. If it's not, I think, you know, for me, it's a no-brainer. It's going lower next month. On that note, I've got something very special to announce, actually. I think you're going to like this one. I've got tomorrow. You have to be there. You've got to come to live. If you haven't ever been to live, you've got to come to live because we know how good the Wolf is. We know how good the Claude is. And I've got a guy who's joining us tomorrow, and his name's Andrew Page. And you can see him there. Good-looking young guy, but very, very clever. Got a great reputation on calling the markets. Got a great business that he's going to tell us what he does about that he does. But a superb analyst. So I'm really honored to have him on board tomorrow. He's going to be Ask the Analyst live. He might give a different view or a different way he sees the world than maybe Claude does or what I've done. But it's always a view that's actually done very well for him in the past. So well worth having a look. And again, I think he's going to be. It's a real honor to have him on board. So make sure you're there. Ask the Analyst tomorrow, 12 o'clock. Thank you very much, and have a good day. Thank you. Bye bye.